Alright, hey guys, hope everyone's doing well. So this is going to be another pre-market video, and really just for fun because it annoys me when people do this. This person is spamming a lot of people who are really just, I'm assuming on YouTube, he's spamming a lot of trading videos. And this guy, so I clicked on the link for fun, I knew it was going to be something that personally I don't at all agree with. But anyways, this guy was taught in this video right here, I believe it was this one, he was talking about how the reason his setups work is because he's taking a trade where 95% of the traders in the S&P mini, he was using that example, are trapped on the other side. So, and to me, that instantly made me think about, okay, so he's saying that his trade, that he's getting in on a trade where 95% of the traders are trapped, but he only has an 80% he's only profitable 80% of the time, or 8 out of 10 trades. To me, that doesn't make sense. Number one, there's 95% of traders are never completely trapped. That's assuming that there's only 5% that are going to be right. And I mean, really, I would never trust these kind of people just because, and maybe I'm wrong, maybe he is one of the most profitable traders out there. And if he is, someone please inform me and let me know, and I'll make another video saying that he is profitable, that this person is 100% true in what he says. Really, the main reason why I'm bringing this guy up is because I find it annoying when people spam people, and I call complete BS when people claim that that their teaching or education is the only way to be profitable, and that everybody else doesn't know what they're doing. The market's full of very smart people, and they're on both sides. So the traders who are buying right here or above here, there's equally smart traders selling. And JP Morgan's buying, Goldman Sachs is selling. And do you really think one is smarter than the other? No. So I immediately, when I hear people say certain things like they're the only ones that know how to be profitable, their education is the best, blah blah blah, I immediately write them off and think they're either, as Al would put it in his videos, they're either being dishonest or they're delusional. So in my mind, this person's either dishonest or delusional. So let me just take care of this. And normally when people do this, I just report it as spam, delete it, and move on. So, but it humors me when people send me this stuff thinking they're, you know, I don't know how people believe what they say. But, I mean, I guess I do. When you're starting out, you're hopeful. You're looking for someone to help you. But anyways, so just a few thoughts. First off, before I get into pre-market, I want to talk about what's the best way to start out. Everybody, it's hard because there's so many avenues. And what you'll quickly find out, especially when you become profitable, is you want to try and push your volume. And it's very tempting and easy to start trying, especially with Forex, because I've done it, trying to take overnight trades, trying to do things you're not fully comfortable with. And you'll probably end up losing money from it. So, my best advice is if you can trade for a couple hours in a day, only do that. Trade a few hours in a day, try to make 20 or 40 pips, and just do that consistently. Don't try and start taking overnight trades. Don't. And take this with a grain of salt. I mean, don't. For some people, that may work well. I just know for me, when I was trying to figure all this out, and I still am in many ways, the more things I've added to the equation in terms of things I'm doing, the less consistent I got. So I've always found that for me, I tend to be most consistent when I'm just trading one market only, and it's usually the dollar yen. That doesn't mean I won't trade other markets at times, but it's usually the dollar yen, and it's usually going for 20 or 40 pips. So, it's situations where I buy this bar, buy this close, scalp out, maybe buy this low, scalp out, maybe, I don't know, maybe sell this close, scalp out. It's just little consistent things. It's so tempting to say, gee, well, I could, could look at I could short the euro dollar. I could sell here, sell up here. I'll probably get a second leg down, and if I do, I'll make a fortune. I'll make 100 bips. You will. But the problem is can you withstand the trade? If you sold here, can you withstand this and not be forced out? So I'm just right now, for me, I'm very resistant to long overnight trades. It's just not something that I've tried it here and there, and it's just not. It goes against my nature in a way. Now I still do it some, but I really don't do it that much. So the whole point of that was to really just say there's nothing wrong with trying to keep it simple, especially when you're starting out. So anyways, daily chart, sideways for many, many days. Clearly 50-50 probability. 50% pullback for the bulls. You can see what happened. The bulls bought 50%, scaled and lower, scalped out. This is strong down. This is double top. So the bears on the weekly chart, the bears are hoping for this double top, right below the neckline, measured move down. And right now it looks pretty decent for them. The bears would really like for today to sell off, and the bears get a third consecutive bear bar. But I don't think that'll happen. Monthly chart, trying to form it's basically a double top. Failed stop entry. And this is the thing about when you're in a tight trading range, you often get stop entries that look really good, and then on the one bar later, you think, gosh, why is it turning down? Tight trading range. There's always good looking stop entries in the tight trading range, and the math's bad. It's as simple as that. 60-minute chart. What do you see? Large trading ranges. We went up, 3 pushes, immediately sold off. Tested these lows, reversed up, sold off again, 3 pushes down. So right now, I think we're always in long. Now let me start with that saying I think. That is because it's not that clear. The only reason I think we're always in long is, for one, we have 3 consecutive bull bars, so probably the first reversal up will fail. Second, this was clearly always in short, and we got 2 legs down. So it's, in my mind, it's pretty obvious that the bears get out above this bar at 2 a.m. Bears get out, the rest of the bulls buy, and that's that. The problem with that is, if this bar was to close on its low down here, bulls probably get out, and bears have to sell again. So that's not, the bulls really need more. I think, certainly at least 50-50 chance I think we'll break to the upside. We may even try to get some sort of measure move up. So, but I'm not sure yet. But if I had to do anything, I'd be long, stop below here, betting on some kind of measure move up. So really not a lot to say with that. 15-minute chart. Lots of sideways price action. You can see spike of channel, trend line break, and then we're going sideways. And this is nothing. This is a 60-minute chart. Usually when you get a major trend reversal, you get a trend line break and a sell-off. Most of the time they just go sideways like this, and they typically do not, they don't do what you want. So that's pretty typical. Most major trend reversals just go sideways. So anyways, I hope that helps with that. And we talked about a few more markets. Euro dollar been rallying up. Possible measuring gap, maybe a measured move from this low to this high going up. Maybe something like this. Very, to me, unlikely. We just reached a measured move of this. So from this open to this close, going up. Strong breakout, then we had a strong sell-off. So to me, big up, big down, rally back to the middle. I think it's more likely we test down, but we can get a really deep pullback. So if I had to do anything, I guess I'd sell. Stop up here, betting we test down to here. But you'd have to be prepared to hold over the weekend. So the Swiss franc, huge bull breakout. You can see this is kind of consecutive bottoms. Had a double bottom here. Maybe you can call it 3 pushes, 1, 2, 3, so a wedge. Strong bear breakout. And we even got a measured move. Clearly a measured move down. And then another 3 pushes, 1, 2, 3. So you can sort of call it consecutive bottoms. I would really just say it's a strong bear breakout. We're resetting the count, and the bears will probably get 2 or 3 more pushes down. More likely 3 because this is so strong. First push, pull back, pull back. Second push, pull back. Third push. Now we're trying to get a bear breakout. So we tried to bottom here. We got a bear breakout and a measure move down from this high to this low. Now we're trying to break out again over here, and the bears want the same thing. They want some sort of measured move down. Well, they're probably not going to get it. And we're turning up. So this is probably a major reversal. We could get a deep pullback, but we'll probably get a second leg up and at least a little swing. But it's important, how does this bar close? Does it close here when it's low? Or does it close up here when it's high? Or does it close in the middle? If I had to guess, it'll close in the middle and be confusing. mini. Strong sell off yesterday. So we gapped up above this trading range. So the odds are price will fail and have to test down. So on this bear bar, it's a short, 25% chance it's the low of the day, which it was. So you sell, if you're taking this trade, you sell, put your stop up here, and maybe you get out here. If you don't, you probably just hold. But it's low probability, and it's also big risk. But it's a valid trade. Anyways, we did that, 2 legs down. Bears probably get out. Aggressive bulls buy. I would not. Maybe I'd buy after 3 or 4 consecutive bars. However, this is damaging enough of a sell-off that the bulls probably will not get a trend. And at best, a trading range. So they ended up getting 2 legs up, and then we got 3 consecutive big bear bars. Here, probably always in short by 11:35. If not 11:35, definitely by the next bar at 11:40. And then it's just, you sell the close. So you sell, and if you're brave, you just hold. No reason to get out, no reason to get out. Here, you got to be thinking, big tail. Big tail on the bar. So we're probably going to fall and make a new low, but we may not go that much lower. So a lot of traders are going to scalp out at least at this low, if not 1 or 2 points lower. And that is why you got this bar. Bulls, they know it's climactic. Consecutive sell climax is 1, 2, 3, 4. Again, that's 1, 2, 3. Pull back was here, and then 4. Best sleeping bear bar. They know this gap will probably close, so they'll buy. Then when you see this strong rally, a lot of bears that sold this close, the experienced ones, many will wait for a bear bar. They won't sell here. They'll sell below this bar. They'll be so disappointed that they'll just exit the trade, break even on everything, which would be basically here, which is why we got 3 bars up. So always in long. A lot of bulls will get out below the second entry. Aggressive bears will sell, but then they got to get out here. Probably a higher low major trend reversal. And then when you get 3 bars up, we're probably going higher, but we're probably not going to get much higher, but that much higher above this, even though we did. And we closed at the midpoint. We actually even got back to this bar, so bulls who bought here could have waited for a bull bar and bought more here. And 2 things. Some got out break even. They tried to here, could not. Maybe some bought here. If they bought here above this bar, they could have gotten out break even. And you can see many exited up here. So I hope that makes sense. Alright, that's all I've got, so have a good day. Thanks for watching.